Hey guys, how's it going? Mark Sky Stocks back at it again. I'm just pretty much gonna do a quick little clip on risk reward. Typically you guys will see me put R and R/R. That's what it basically stands for. Risk reward. Had a few traders that I was talking to today that didn't too much understand it, or they probably did understand it but just didn't factor it in their trading. So I told them I'll do a quick little clip on risk reward and how I manage it when I'm trading options. Now, if you're trading equity, it's a little different because you can pretty much see the price levels. So let's just go ahead and let's mark this level. We'll use Apple for example right now, and what we'll do is just mark this level so we can know what we're looking at, and we can kind of put a risk reward on this if we was trading equity, right? This is not options. Let's just say we're trading equity right now, right? And then I'm gonna go into options as well. But I just want you to just slap that on there real quick. Doesn't have to be perfect. Let's just zoom in a little bit. Well, you know what? Let's make it perfect. How about that? So we can have real good numbers on what we're looking at and how we're trying to manage this trade, right? Let's try to get this. It's not snapping where I want it to. You know what? Let's try it one more time. If not, wherever it lands, we'll just keep it there just so we can get this video going. That's fine right there. So let's just say 187, right? We're watching the stock and it's dropping down. All right. So we're watching this today, traded, it bounced it up, it's coming back down. We're looking for an entry right here towards the close. We think that it's going to go higher, right? It starts popping up, it starts moving up. So we're going to use this level right here. The minute it crosses over this level and holds, we have two levels of risk if we're trading equity, right? The first level, once it takes this level out, let's say we take it on this candle, this would be our risk, the 187.29. Or you can have the low of the day, which is 186.60, whichever you want, or you can even make this a risk. When it comes down to your risk, it's all up to the threshold that you're willing to take on your money, right? So if you're allowing it to pull here, you should understand how much of your, like, let's just say you take 100 shares here at 187.45, right? And then it drops all the way down to 187 even, right? That is a $45 loss if you had 100 shares that you're taking on it. So as long as you understand that, then you should be fine, right? That's trading equity. Now, the difference between equity and options, right? Whenever you're trying to determine your risk reward, one of the things that you want to look at is the delta, right? So let's just say I know some of the traders today jumped in those 195 calls on Apple today, right? So their mind frame should have been, hey, I'm going to look at the delta and I'll pull those contracts in, right? I'm going to look at the delta, and that's going to determine whether or not I should take those 195 calls, right? So I'm not sure when you guys took it today, but when I was into the room, I heard you guys discussing it, and I just started looking around, and I try to help you guys chart it from down here, and I was pretty much trying to walk it up with you guys, right? So I'm not sure when you guys took it, but it seems like a few of you guys was down on those calls. So what you guys, one of the things that you guys can start doing when you guys take option contracts is look at delta. So let's pull that up, right? So let's look at these. I'm pulling it in right now. Hopefully you guys can see that. Let's look at these 195s, which is right here, right? Those 195s are going for 17 cents, right? So let's move this out of the screen now. So we know the 195, the delta on those contracts are 17 cents. You should always have your Greeks, right? As you can see them right here on your platform, so that you know your Greeks. You need to learn your Greeks when you're trading options. It'll help you a whole lot when it comes down to managing trades. But one of the ways that you can do it is by looking at the delta. So let's just say 195 deltas are 17 cents, right? Right. So basically what I'm saying is, for every point to the downside, you're going to lose 17 cents on your contracts. So let's just say you put $300. So every time it drops a buck, $17, then you can factor in the gamma and so on to give you a more accurate number on how much money you're going to lose. But right now we'll just use the delta, right? So let's just say we was looking at this trade, right? It came down. You guys wanted to enter it, right? So at this point, let's just say we entered it at, what's this level, right? 187.14, right? So your risk on that is 186.60. So if you go 187.14 and then you just deduct it by 186.60. That'll give you a 54 cents move, right? So let's just say if you wanted to risk only $17 on this, which is 17 cents, you only want to give it a room of point downside, so you can only probably give it to about right here, right? That is your mass risk on that, because you know your delta is 17 cents, 0.17. So if it pulls a buck on you, you're going to lose that $17. If it pulls more than that, you'll be over it. So that can put you about a 20, almost 20 bucks down the hold if you took that trade up here, right? Because that's the pull. So your delta can tell you how much more. So let's just say, me personally, I only want to risk $17 on this trade, right? But my true support is at 185.10. So this trade to me doesn't make sense, because now it's telling me if I take it here, 187.28, right? It's telling me that I have 185 would be my next support. So if I only wanted to risk $17 on this trade to see if I can get X amount of dollars to the upside, this trade makes no sense. In order for me to take it, I need to take it closer to this 185.10 to give me that threshold that I'm looking for on the downside, right? If I take it here, then I'm not putting the trade in my favor if I only want to risk 17 cents. Now, if I wanted to risk, let's say 34 cents, then possibly, yes, this trade will make sense, because that's 2 points to the downside pretty much, right? 185, 180, yeah, about 2 points to the downside. So at that point, if I'm okay with risking like $30+ on this trade to make X amount of dollars to the upside, then yes, this trade makes sense, right? So that's how you use the delta to help you with your risk reward to the downside, right? Even to the upside, if you wanted to grab puts on it, it's the same concept. You need to understand where your support levels on the stock so that you can take trades. If you're just taking trades anywhere, you're not skewing the trades in your favor. So risk reward plays a big role in trading, and I don't understand why traders overlook it, but that's how you win. That's how you put trades in your favor. So let's just say if I'm trading 4 or 5 trades out of the day, right? And if I let 3 of them go against me out of the 5, but I had a good risk reward on each one of them, and then my winners, I allowed them to win 9 times out of 10. I'm still going to be profitable on the day because I let my winners win and I managed my downside on all my trades. So once you start doing that, I can almost guarantee you, you'll become a profitable trader over time, because what you're doing is skewing the risk reward in your favor, right? That's the biggest part of trading. Once you understand that and understand how to skew trades in your favor, that's when you'll start changing, and you'll notice even when you take losses, your losses are minimized because you already knew, you went in with a game plan knowing how much you was willing to lose on that trade. Now, if you're willing to risk $17 on this trade, well, you need to be trying to make at least 90 bucks on this trade, right? You got to put the trades in your favor, right? So let's say if you're doing a 1 and 3, right, on a trade. So well, at least 51 bucks, right? So risk $17 to make $51, right? Or if you want to do a 4 to 1, it's pretty much the same thing, right? What you're going to do is just risk $17, right, to make $68, right? That's how you're skewing that trade in your favor. But you need to get that. You have to see that amount of room to the upside so that you can get that. So if you're taking this trade here at 187.28, you need to see about 3 points to the upside. In this case, you only have about 2 points to the upside. So you're basically, this is pretty much an even trade. I don't like this trade. I wouldn't have took it here. Why? Because I have 2 points to the downside and I'm having 2 points to the upside. That's a break even trade. I'm not putting that trade in my favor. Now, if I can get it around here to make 3 points to the upside, at that point, that trade is now in my favor. I'll take that because I know where my stop is. I know how much I'm willing to risk, and it's in my favor because if it pulls down about 17, 18 cents, I have this level right here, support right into that. If it holds, then I get the curl I'm looking for to push to the upside. And that's what, once you understand that and once you start doing that, you'll notice how your trades will be more profitable because you're willing to risk X amount to the downside to make X amount to the upside, right? Your upside movement always have to outdo the downside movement. So that's how you put in risk reward in your favor. Again, I said I was going to keep it simple. Hopefully that was simple enough. If not, guys, please reach out. I'm willing to help. I'll figure out another way to do a video to make it even more clear if this wasn't clear enough. So again, please let me know however I can help. As long as I got free time and downtime, I don't mind creating videos and putting it out there so that you guys can understand some of the little minor things people look over that hurts them in the long run when it comes to trading. Again, guys, this is Mark Sky Stocks. If you like what you're hearing, please give me a like below or even subscribe to the channel. Other than that, that's pretty much all for me. So guys, take care, enjoy your day, and I'll see you tomorrow.